We just got one of the biggest signals yet that XRP may be poised for an explosive move. XRP futures markets have gone absolutely insane. On BitMEX, volume spiked over 2,668% in a single day and stayed up nearly 600% over the next 24 hours. So, what does this actually mean for the spot price of XRP? Have we seen this kind of futures explosion before with other crypto assets? And did the spot price follow? That's exactly what we're going to break down in this video. Let's get into the data. So, what exactly happened on BitMEX, and does it tell us something important about XRP's price? A sudden explosion in futures market activity for a digital asset like XRP usually indicates a massive influx of trader interest, rising speculation, and the anticipation of a major catalyst or news event. In this case, XRP futures volume on BitMEX spiked 2,668% in one day, then continued nearly 600% higher over the following 24 hours. This tells us one thing very clearly. The market is bracing for heightened volatility and a potential major price movement. Most people would assume that means upside, but in reality, it just means a big move is coming. So what does a surge in futures volume actually signal? When futures volume explodes, it usually means traders are repositioning around expected market shifts, taking on leveraged bets, or hedging ahead of important news. If you see big volume spikes while price is flat or even dropping, that can indicate heavy hedging or short exposure. But when that spike comes with rising open interest, it suggests new money is entering the market and taking directional positions, either bullish or bearish. In many cases, this kind of setup comes before a significant price move in the spot market, especially if a major narrative or catalyst is forming in the background. For XRP right now, that potential catalyst is very clear: ETFs, regulation, and institutional inflows. So what could be driving this sudden interest in XRP futures? Some people like to point to ISO narratives and payment standards, but the more immediate and concrete driver appears to be upcoming XRP-related ETFs, institutional products from firms like Franklin Templeton, CoinShares, ProShares, Grayscale, and others, and growing speculation about institutional inflows into XRP. Traders are looking ahead at potential ETF launches, regulatory developments, and large funds accumulating XRP. All of that can set the stage for a sentiment flip from neutral or mixed to aggressively bullish. And this isn't just a weird anomaly on a single exchange. Other XRP futures markets have also seen spikes in volume, changes in funding rates, and increases in open interest. Across centralized exchanges like Binance, OKX, Bybit, Kraken, Coinbase, and decentralized perpetual platforms like Hyperliquid and others, we've seen Binance reporting derivatives volumes surging toward billions in XRP, Kraken with frequent 24-hour options and derivatives volumes in the tens of millions, Hyperliquid controlling a large share of the perpetual DEX market, OKX and Bybit seeing XRP funding rates and open interest spike, often associated with bullish leveraged positions, and other platforms like LBank, DYDX, and Crypto.com showing strong XRP/XRPUSD trading activity. Coinbase has also reported sharp changes in both spot and derivatives flows for XRP. The key point is simple: this is not an exchange-specific event. It looks systemic across the XRP derivatives market. Now, the real question: have we seen this type of futures explosion before with other cryptocurrencies? And what happened next? Yes, there are several real-world examples where a surge or collapse in crypto futures trading volume had a major impact on the spot price. When Bitcoin futures launched on the CME in December 2017, we saw massive speculative interest, a sharp run-up where Bitcoin's spot price peaked near $20,000, and then, once pessimistic investors could open large short positions via futures, a brutal reversal and a long bear market. It's a classic case where futures accessibility changed the structure of the market. For Ethereum, there have been several periods where a dramatic rise in futures and perpetual contract volumes often with high leverage, came before sharp spikes in volatility, major rallies, or severe liquidations and crashes when contract markets overheated without enough spot market support. The lesson from both BTC and ETH is simple. When futures markets go crazy, the spot market usually does not stay calm for long. Now let's connect this to XRP ETF activity. Recently, we've seen notable XRP purchases and flows from Bitwise, Canary, and more products coming from bigger players like Franklin Templeton and Grayscale. Even though Bitwise and Canary are relatively small compared to giants like Franklin Templeton and Grayscale, their activity is already significant. To give you an idea, if the current pace of XRP purchases for just Bitwise and Canary continued until the end of the year, they could absorb around 1.23 billion XRP. That's over 1 billion XRP for only two smaller funds. Now imagine what happens when larger ETFs go live, more institutions allocate to XRP, and liquidity from OTC desks and dark pools starts to dry up. Once the OTC and hidden liquidity is mostly absorbed, what's left is exchange supply. If demand continues while available XRP decreases, price has only one way to resolve that imbalance: up. No one can responsibly predict exact price targets like $10, $20, or $50, but that's where some of the more aggressive market cap multiplier scenarios come from. The real question becomes, at what prices do institutions start taking profit? At what level does retail finally decide to sell? Some holders might be happy with $10 XRP, others might wait for $20, $50, or more, and some are here to see how far this experiment can really go. There is now a growing set of tools to track XRP flows into funds and treasuries. You can monitor daily ETF inflows, cumulative totals, which funds hold how much XRP, and how concentrated or diversified those holdings are. On top of that, we're seeing XRP being adopted as a treasury asset by various companies. Some of the names and figures include Evernorth, Tridentity, Weebas, Vivo Power, logistics firms, and more. Altogether, roughly $2 billion has been promised or committed to be invested into XRP as a corporate reserve asset. More companies are entering the XRP treasury space, with new announcements and intentions, and momentum appears to be building around using XRP as a strategic balance sheet asset. Now let's zoom out to the bigger regulatory picture in the US, because this is crucial for the long-term future of XRP and crypto in general. A key development is the push for a comprehensive market structure bill in the United States. If the US finally passes clear crypto regulation, banks, financial institutions, insurers, and public companies will know what they can and cannot do with crypto. It will provide a clear framework for compliant participation in this market, and it would likely unlock a new wave of institutional adoption. For years, the industry has faced a highly hostile regulatory environment, especially under SEC leadership that chose enforcement actions over clear rulemaking. Companies like Ripple and Coinbase went to the SEC in good faith, asking for clarity and workable rules. Instead, many of them received Wells notices, lawsuits, and mixed or evasive answers instead of straightforward regulations. This chaos has pushed a lot of innovation offshore and forced companies like Ripple to expand aggressively outside the United States. Ironically, that may have made Ripple stronger globally, as they built partnerships and infrastructure across many regions rather than focusing only on the US. At the same time, Coinbase and others decided they had to fight back politically and legally, supporting pro-crypto candidates, scoring members of Congress based on their crypto positions, funding advocacy organizations and policy groups, and even suing the SEC for failing to follow proper administrative procedures. All of this has helped make it politically risky to be openly anti-crypto in the US, and has brought the industry closer to gaining the regulatory clarity it needs. So, to recap, XRP futures markets have seen an explosive spike in activity, not just on one exchange but across the board. Historically, when futures markets go parabolic, the spot market doesn't stay quiet for long. We're seeing growing interest from ETFs, funds, and corporate treasuries absorbing large amounts of XRP. And in the background, the US is slowly moving toward clearer regulation that could unlock even more institutional adoption. Is XRP about to full send? No one has a crystal ball. But the signals from futures, ETFs, and treasury adoption are some of the strongest we've seen so far. Let me know what you think might happen next with XRP. Thanks for watching, and stay tuned. I'll keep you updated as the data comes in.